We are witnessing something historic happening right now. Gold isn't just ripping to record highs, it's doing so at the exact same time that the stock market has reached its most dangerous valuation, greater than the dot-com bubble and the run-up to the Great Depression. Add in record debt issuance and a surge in physical gold delivery demands, and you have the clearest signal yet that the reset is accelerating. And history shows us exactly how this ends. In crisis for those who stay in the system, an opportunity for those who get out in time. In case you missed it, gold has been on a tear, surging past $3,500 an ounce and hitting all-time highs. But this is not just about gold's price. It's not even about the fact that gold is up 34% year to date as one of the best performing assets. Sorry, I just had to sneak that in there for the shiny rock naysayers. But no, this is about why the timing of gold's price surge is so important and the clues it gives us as to what is coming next that will undoubtedly impact the economy, the US dollar as we know it, and our wallets. Now, the mainstream news will tell us that it's all because of rate cuts, right? Speculation around rate cuts in the next 2 weeks. That is why gold is doing well, because rate cuts signal a weaker economy and therefore a weaker dollar, and people are going to move into safe haven assets. But there is so much more going on behind the scenes that they don't want you focusing on. Now, I saw an article that came out yesterday saying, gold hits record as central bank holdings top U.S. Treasury for the first time since 1996. Let that sink in. Gold tops U.S. Treasuries for central bank holdings. Now, I'm going to explain why this is such a big deal, but listen to this quote from Tavi Costa, the analyst who compiled this data. He says, this is likely the beginning of one of the most significant global rebalancings we've experienced in recent history, in my view. Think about it. U.S. Treasuries are supposed to be the foundation for the global monetary system, right? The dollar is the reserve currency. And for the first time in decades, we're having gold surpass dollars. This is the end of dollar dominance as we know it. Think about it. Nations might not be able to dump all of their treasuries at once, but they absolutely are slowly removing their treasuries. They are not rushing into the dollar. This tells us two things. Number one, they are done with dollar dominance, right? They are over it. Nations are tired of the West controlling the entire global monetary system. They don't trust the dollar any longer, and for good reason. Number two, they are actively choosing to move into gold. They are not looking at another fiat currency as the alternative. They are choosing gold, a true store of value, a tangible asset, something that has withstood the test of time, that actually is really the opposite of the dollar, right? It can't be weaponized against these countries. It can't be printed more of or inflated away. These are all reasons that nations are choosing gold, the same way that individuals choose gold to protect their wealth. These banks are actively positioning themselves for the reset that is already unfolding but is now accelerating. They are getting in a position of power for the new monetary system. Now, I have seen your questions and comments before, so I'll pause. You've asked me, okay, Taylor, what do you mean by positioning? How is that different than, let's say, diversifying? And diversification is spreading out your risk, right? So you have a variety of investments, whether it's treasuries, euros, gold, et cetera, et cetera. So if something happens to one, you're protected over here. It's hedging your bets. But positioning, the kind of positioning we're seeing from central banks, it's not hedging your bets. It's placing your bets. It's a strategic maneuver, right? They are preparing for a regime shift, and they are doing so by flowing everything they can into physical gold, because they know that when the dollar fails, gold is going to be the thing that will protect them on the other side of this reset. You might still be wondering, well, how do I know that it's positioning versus diversification? And my answer to that is that it's all in the data. If you look at the way that these central banks are pouring into gold, they're buying gold like it's cheap. I just said, right? Gold is reaching all-time high, vaulting to new records. What are they doing? They're buying as much of it as they can, and they're not buying it to turn around and sell it. They're buying it to hold because they know the prices are going to be that much higher in the future, and they know that it is going to be the true store of value, a commodity that other nations can trust, unlike a failing fiat currency. And while they're buying all this gold, they are simultaneously reducing their treasury holdings. But it's not just that either, right? We're seeing physical gold deliveries over gold paper promises going in record numbers. Right now, we are at the beginning of September. We have seen more silver and gold delivery requests on the COMEX than we did year to date than we did in all of 2024. And we're not talking about mom and pop buyers here. We are talking about billions of dollars. Large institutional buyers are getting as much gold as they can get their hands on. Powerful buyers here, that's what we're talking about, elites with insider information. And while I personally might not have access to that information, I do have access to see the moves they're making. We can all see the gold that they're buying. And when I smell smoke, I don't wait for someone to yell fire, right? I just start moving. And all I have to do to really confirm this is look at our debt. And I'm not talking about 37 trillion and counting, which is already insane. No, I'm talking about just the last 30 days. Look at the last 30 days. We have added over $500 billion in debt in just 30 days. There was a period of time where people were shocked about $1 trillion every 100 days. Now imagine $1 trillion every 2 months. I mean, that would take us just the next 5 years to reach $50 trillion. And that's if nothing changes. And we know that as this demand for our treasuries continues to decrease, right? Gold up, treasuries down, as treasury demand continues to decrease, what's going to happen to the interest on our debt? It's only going to go up, meaning that that is going to compound and compound, and our debt is going to be that much larger, that much faster. This will really leave the US government with no option but to turn to inflation. And I'm not even talking about printing dollars to avoid a technical default. I'm talking about devaluing our own debt. That's where we're at. That's how serious this crisis is. I'm sure many of you have heard of the Great Melt-Up, an unsustainable jack-up of asset prices that eventually ends in a catastrophic bubble burst. Except this time it would be by the Fed's own doing, and the fallout would be far worse than 2008 or any other kind of crisis we've seen. We're seeing homes that are completely out of anyone's price ranges, right? These homes are sitting on the market for longer. There's a reason because of how high these asset prices have gone. The stock market is completely overvalued. We're seeing valuations not seen since the dot-com bubble or the run-up to the Great Depression. Today, they are even higher. In fact, I saw a Bank of America article that says, or an article saying that Bank of America says that investors see stocks overvalued, with 91% of market analysts, 91%, saying that stocks are overvalued, the highest ever proportion going back to 2001. That was the last time that anywhere even close to this many market analysts said these stocks are overvalued, meaning that they are based on hype and speculation, not fundamentals, right? This is a bubble that continues to grow and grow. In fact, we are seeing as well that the Buffett indicator, or market cap to GDP, is about 200%. It was 150% in 2000 and 100% in 1929, right? The higher that climbs, the farther it falls. The truth is, we are witnessing a systemic reset in real time. Central banks aren't just hedging with gold, they are positioning for what comes next with gold. Our government isn't just borrowing more, it's borrowing more while running out of options and buyers. And markets aren't just high and there to take profits out of, they are overvalued and speculative, and the bubble is going to burst. When we see the dollar be devalued, that is not only going to hit Wall Street and our government, that is going to hit everyday Americans. That is why when I look at all of this, when I look at the facts, when I look at the data, it becomes so clear that while central banks aren't telling us what they're doing, they are showing us with their actions. All of these pieces come together and tell me that the reset is accelerating. And gold, in my opinion, is not just an option, it is essential. It is going to be a tool that is not only going to let you survive through this reset, but thrive on the other side. That's why in the beginning when I said, we see how throughout history all these crises ends. It ends in crisis for those who stay in the system, but it does provide an opportunity for those who are aware and take action before the reset hits. Now, I talk about the reset a lot, and I know it's a process that leads to an event, right? We are in one right now. but I am telling you, it is accelerating. All of the signs are there. And I look at history, right? We study historical resets through time, currency life cycles, and you can see we have an actually incredible resource. If you don't already have a copy, I know I've talked about it before, you can download a free Built to Endure report. We cover 100 years of data in this, multiple currency life cycles and how gold protected wealth through those life cycles, as well as, in my opinion, just as importantly, where we are today in the timeline compared to those resets. You can download your copy by scanning the QR code on the screen. We make it super easy. Again, it's completely free, or you can download your copy in the description below. We believe everyone should have a copy of this information. I love it because it has so much information all compiled in one place. I do a lot of research and I'm always having to go to a million different places. This puts it all together in one simple, easy to understand way. And again, gives a lot of information about where we are today compared to past currency life cycles and where we are in the reset and what you can expect to happen next. But the bottom line is that gold does not lie. What we're seeing today with gold and with all these other facts is telling us that yes, there are people out there who are enjoying and profiting off of the great melt up, but make sure you have your insurance policy in place, physical gold and silver. And that is not going to go on forever, right? We don't know how long it's going to go on. But when it all comes crashing down, you do not want to be left there kicking yourself thinking, I wish I had protected my wealth sooner, right? That is what we are all about, trying to help everyone out there make sure that you are positioned for what is coming next, that you have a strategy in place. Now, if you know physical gold and silver are the answer and you want help building that strategy that's tailored to your goals and your concerns, call us at the number below or scan the QR code and set up a time that works best for you to talk to one of our expert analysts. Even if you already have physical gold and silver and you want a second opinion because it's that important, too important to leave to chance, talk to our team. We are happy to answer any questions you have. And as always, I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.